Well, g'day there, everybody. Thanks a lot for joining me as at the close of trade on Monday afternoon. It has been a rather dramatic session. We began the day with all three of the US markets down very close to 2%. This is on the back of a couple of tweets that were let go late Sunday evening that, of course, impacted the open on Monday. What is very interesting to point out is that the markets themselves, although they were weak, very much so to begin the session, for the entirety of today's session, they did simply just claw on up and more or less, relatively speaking, change rather unclosed. We pulled back roughly 3/4 of the open losses, and what we're left with is another one white candlestick, which is showing again the resilience of the market and the potential, the likelihood of this turning out to be some form of a stair-step pattern, which is essentially going to take us at some point relatively soon, right, to break above these little swing highs that we've priced in the month of April, which have also trickled through ever so slightly into the month of May. We're still yet to actually push up above 2,957. I understand if your stomach is churning at the moment. Boy, wasn't it an interesting session? But by all means, if you wanted to take today's session alone and just understand, or at least think about it, sit on it for a little bit and understand the weakness that began very early on in today's session. However, again, the resilience of the dip buyers to show back on up and drive this market up on up high. There might be a few jokes, I understand, if people are going to call the sort of the daily action to do with, of course, the plunge protection team. Regardless of that, it looks as though the market is still stabilizing and they are again coiling, right, as they have been doing over the past 3 weeks, which is essentially going to set off potentially the pressure cooker as we break out above these swing highs. So pay attention to the 2957 pivot on the S&P 500, to a lesser extent on the Dow Jones Industrial Average. This is the odd market of the three. It's still yet to definitively move above our first target. This target was at 26,664, and it really began, or at least the trade setup, was all the way back down here at 23,432. Mind you, really for the past 2 months, we have been essentially doing absolutely nothing. We've been moving sideways. We've hit our target. But really since then, again, what we've essentially done today is close, definitively speaking, this gap. Although we did do it again on Thursday last week, we've come back down for a secondary retest. We have a lower wick as at the close today, but with another real white long day Morobozu type of body on the candlestick. So again, as long as we more or less hold above this gap over here, we're still expecting this market to take out the swing highs ultimately, as you can see too. And I skipped over this on the S&P 500. What we essentially did today was just retest, right, that rising 50-day exponential moving average, and we did start to see that of a reaction. So again, whether or not you want to call this that of a stair-step pattern or even potentially that of a bull flag, off from the rising 50-day exponential moving average as it stands and as at the close on Monday. Again, we're still yet to actually really inflict, so to speak, any technical damage on the US market indices. The oscillators are in reset mode. However, what we spoke about again over the weekend was the simple fact that the CCI is coiling, and it is coiling simply below that positive 100 reading. So as soon as you see a white candlestick, or at least another long day white Morobozu candlestick, essentially take out this little swing high here to begin with, and then ultimately this swing high, you should see the CCI not only on the Dow Jones Industrial Average turn up above 100, but you should see the ADX also confirm the continuation of the trend off from this rising 50-day exponential moving average. Now, let me flip on back into the S&P 500. You can see straight away there is a distinction between these two markets. We are nowhere near the rising 50 like we are on the industrial average. The industrial average is, relatively speaking, a little bit weaker than both that of the S&P and the NASDAQ. However, again, it's just looking like a continuation off from these rising exponential moving averages. The markets themselves today had every reason to break considerably to the downside. It was certainly looking that way again as we moved into today's session. However, surprise, surprise, or lack thereof, the markets held in there, and they did claw back again about 3/4 of the opening losses, which again is another sign of strength, resilience, and another sort of tap on the shoulder warning you, or at least forewarning you, that the market itself is looking to drift on up higher. And again, don't underestimate the strength of this market when in fact we do move above these trigger points. 2,957, again, to repeat myself, on the S&P 500. If I bring up the ADX and the CCI, you can see the CCI is actually above 100, whereas the ADX is still resetting. It's now getting closer and closer and closer to that resting 20 period, or the 20 signal on the ADX reading. Now, again, if I zoom on into the detail of the NASDAQ, you can see the big gap down. This is the close on Friday, the open on Monday. We more or less opened where we saw the intra-session low on Thursday, but not only did we overshoot, of course, the Thursday high, we actually closed above it, and we also pierced as well into Friday's white candlestick as well. So again, this is looking like a stair-step pattern. You see that little rectangle I'm drawing in the green on my screen? This is the pressure cooker, and essentially the markets themselves, much like the Dow Jones Industrial Average, it's moving sideways allowing price to once again interact with the rising exponential moving averages. And at some point, one of these exponentials is going to act as that trampoline of rising support, and it's going to propel prices higher. So if you're looking to jump into, pardon me, the NASDAQ, you can have a look at 8,252. Otherwise, you can begin nibbling on market positions if you wanted to sort of premeditate the entry, all right, or at least take a portion of what would have been your original entry of X full amount of contracts, and then of course divvy up some at market and then take away the rest from that secondary re-entry point that you can see on my screen at 8,252. So again, a churning market, a volatile market, a very noisy market, again, driven by sort of external forces out there that no one can really see coming whatsoever. It was a surprise to see those. I think it was 2 tweets, less than 100 characters, and it just set off, of course, a diabolical sort of immediate reaction. But again, the markets are hanging in there. So again, it's doing everything in its power to really sort of shake out a lot of weak longs and also really encourage, or at least try and push overly aggressive shorts into the market. But naturally, this market is going to continue to higher prices as well across the board for the US financial markets. What's interesting to note as well is if I bring up the transportational average, you can see here we've got another sort of bounce candle off from potentially that of a bull flag. So if I bring up the exponentials, you can see the bounce off from, or very close to, the 50-day. And once we push above this little swing high here, it really opens up the portal or the doorway for us to move all the way up to 11,500 or 11,400, which is going to be a pretty decent move. And you're going to begin to see, all right, the transportational average. I'm just going to write here TA, even though I should put a D over here. All right, Dow Jones transportational average actually confirmed that of the industrial average, which again at this point is still yet to actually register fresh new all-time highs, right? Something that the S&P and the NASDAQ have already done. Now, if I bring up the Russell 2000 as well very quickly, you can see that we're actually, well, first of all, the big distinction to make here is that just like the 4 previous markets that I referenced, they actually all closed down negative. However, they were considerably off the lows. The Russell 2000 actually closed positive. It was up very close to a point. So you're starting to see, even with this volatility, the Russell 2000, which of course is sort of an indice anyway, that more so captures the small to mid cap portion of listed companies, right? We call it, or at least we reference the Russell 2000 for market breadth, right? It's a lot smaller in the actual market capitalization of the companies encompassed within the actual index itself. But it looks to me that we're potentially putting in some form of a cup and handle right here. This is somewhat of a rare pattern. But we are starting to flinch above, if I can zoom on into the detail, above this shooting star candlestick, which is all the way back on the 25th of February. So interesting times. And also this is the pressure cooker, whereby if we do see a definitive break above this 1,614 close, well, then it opens up again the doorway for us to rally very quickly up to 1,750. All right. So again, the market's doing everything for in its power, essentially, for you to sort of close out positions and not believe in the continuation of the market higher. Don't fall for it really at this point. All right. Just wait for this volatility to sort of subside. And once price action begins to break above the all-time highs, you're going to move into a trending market, which is going to be very, very friendly. Now, again, this is the chart of Apple. We were speaking about this over the weekend. What we've essentially done is closed the window. So because of that, I'm going to duplicate this entry and bring it down to essentially $210.42. So you've got the first entry here, second entry at 217.03. Just to recap, we did close the window or get very close to closing it. So we spoke about this over the weekend. These are now the 2 entries, the continuation entries off from that of what appears to be a bull trend. And this is now the bull flag set up as we retest and have successfully retested and found a reaction off from the open of the gap. So that's something that essentially you can change as we move into Tuesday's session worth of trade. This is the candle, or at least, pardon me, not the candle. It is today's candle, but the chart pattern. What we've also done is close the gap between Thursday and also Friday on Amazon, 1,956 the entry. And our target on this trade is up here at $2,000 per share. All right, so hang in there with that. We've got Boeing Airlines again moving into that full-on Bollinger Band squeeze. You can see how we started to once again interact with that lower area of support. Okay, if we can hold up in this area, and I think today was a big test of that, which was a big success. Okay, you started to see the white candle and the lower wick off from the support area. Well, then we're going to bring this entry down in due course. Not so much, or not necessarily as we move into Tuesday's session, but it is something that I am keeping on the radar. Baidu we're moving into earnings on, so we can't really do much with that individual stock. Caterpillar is still holding up above that very critical area of 134. We had this entry at 139.34 that I'm going to keep as we moved into the week, or this current week. And of course, we've only just moved into Monday session, or as at the close of Monday, but this is still looking quite good as well. We're hanging in there, and we haven't actually done any technical damage whatsoever on the downside. So again, it's just strengthening the resilience of that individual stock moving higher. COP doesn't look to be triggering yet. I am looking for potentially a V bottom in this stock. It hasn't produced or it hasn't set up yet, but pay attention to that. If you see that stock begin to rip, begin to soar, there's a good chance we're going all the way back up into those critical resistance areas that, again, we've referenced over the weekend. CVX, no trade on CVX at the moment. Very volatile. Obviously tying into the commodity complex and the oil and the US dollar. So again, although we are keeping a very close eye on the US dollar, and essentially right now it's retesting that breakout pivot, right? The US dollar, and we still have, or at least today we had a little bit of a spinning top candlestick. It's largely going to, of course, influence, right, the noise that we're seeing in CVX at the moment and continuing to see as at Monday. Now, Disney's got earnings in a couple of sessions' time, so that we cannot trade. That has been a very profitable stock. However, at the moment, there are no open trades on Disney. Google is looking at the moment anyway, or appears to be putting in that of a Japanese rounding bottom. So we'll see if this plays out. We've got another engulfing candlestick as at the close on Monday, 1202 looking to come, or for this stock anyway, to come back up to 1267. But hang in there, it might take a little bit of time to actually formalize that rounding bottom. We've got IBM, which was technically trying to break down today. We've got a gap down over the past really 2.5 weeks, essentially of price action. We hold up another white long day Morobozu candlestick. We're still looking at this triggering and moving up to 145.27. We'll see if the market has any legs to it as we move into Tuesday's session. And to conclude with, all right, we've got Netflix, which is potentially one of my favorite trades. We're up and around this resistance area at 388, 385. And if I push the right key on my keyboard, and if it helps me, you can see that the CCIs, although it did turn down, it's still above 100, and the ADX is still sloping, right, in a sort of in a bullish direction, an upward direction as well, an elevated direction. So if you start to see, or not start to see, but over the coming sessions, if you see a long day Morobozu candlestick that closes above the swing highs of this candlestick here on the 23rd of April, well, if I can use my pen drawing tool, and then of course more recently the 1st, the 2nd, and also the 3rd of May, all right, which was Wednesday, Thursday, Friday last week, well then this has got every opportunity and every reason to rocket on up to about $4.17 a share, okay, $4.16.80 up here on Netflix as well. So that's going to do us as at this Monday afternoon market recap. If you have any questions, email me success@pivotpoint-trading.com. Otherwise, jump into that pro analysis class immediately, and you can recapture, of course, the recording that we did over the weekend. All the best, everyone. James signing off on behalf of Pivot Point Trading. Farewell.